Okay, I think that's now live. So I'd like to welcome all councillors, officers and members of the viewing public on YouTube to this meeting of the Corporate Audit Committee. My name is Councillor Mark Elliott and I'm chair of the committee. I'll now call out the names of the other members of the committee and ask them to confirm that they are present. First on the list is Councillor Andrew Furze, who I don't believe is present yet. He hopefully will turn up, but is not here at the moment. Councillor Colin Blackburn, are you here?
Present.
And Councillor Lucy Hodge. Councillor Lucy Hodge. I know that Lucy has had some internet problems, so there might be some difficulty there. We'll move on. Councillor Brian Simmons has said he is going to be late. And co-opted member John Barker.
Hello, yes, present.
Hi, John. Also present are Democratic Services Officer Enfys Hughes and other officers who will introduce the reports as we make our way through the agenda. The Council has agreed a protocol to cover virtual meetings, and this meeting will operate in line with that protocol in accordance with Coronavirus Regulations 2020. The meeting has the same status and validity as a meeting held in the Guildhall. Can I remind members and officers to keep background noise to a minimum, to only speak one person at a time and not to speak over others. Please mute your microphones when not speaking and then unmute when I invite you to speak. Please indicate if you wish to speak by using the chat facility on Zoom by typing MIS, may I speak, and I will call you to speak in turn. Should the committee need to take a vote, I will read out each member's name in alphabetical order. Each member should then clearly state for, against or abstain. This will enable the Democratic Services Officer to accurately record the vote and will also ensure that decision taking is clear to the public who are viewing on YouTube. Does anyone have any questions? Nope, I think we're all quite used to it by now, so that's good. Thank you very much. First item on the agenda then is apologies for absence and substitutions. Enfys, do we have any apologies for absence or substitutions?
I've got a message from Brian Simmons saying that he's involved in another meeting. I understood Lucy Hodge was going to be late and I thought she was present, but she doesn't seem to be present.
Yeah, she seems to be there, but at the moment doesn't seem to be there.
We have two councillors, don't we?
We do. Do we know if we're quorate at that?
I'll just check that for you.
Thank you.
Moment. I'll just message Lucy as well, just to check, because I thought she was there.
Thank you very much.
Just give me a minute. Thank you.
I must admit, I'm not sure what constitutes a forum for this meeting. Andrew Furze is in the waiting room, which would certainly make us quorate. So if I let Andy in.
That's good then, yeah. It's definitely 3. That's fine.
Okay, excellent. Andy, good.
Sorry, apologies for being late, Chair.
That's quite all right. You've just made us quorate, I think, so that's good.
Good, good.
Excellent, and Lucy's there as well. Good.
I'm going to go off again for a second.
Yes. Okay.
It's just coming and going.
Yeah. Okay. No problem.
Yeah.
So we now have Councillor Furze and Councillor Hodge. Declarations of interest. Are there any declarations of interest to be made?
None from me.
No.
Urgent business. I have not been notified of any urgent business. Items from the public. I have not been notified of any. Enfys, have any come in late? No. Okay, that's great. Items from councillors and co-opted and added members. I'm not being made aware of anybody wanting to raise anything. So I think we can skip over item 5. So item 6, minutes of the meeting of 26th of October. They've been previously circulated. Would somebody like to propose those as a correct record of the previous meeting? Councillor Blackburn is happy to propose. That's great. And Councillor Furze was seconding there. Yeah, great. Thank you. Can I assume that everybody is all right with that, with accepting those? I don't think they're in any way contentious, so that should be fine. Please notify in the chat or something if you object, but I think we're all right there. Yeah. So we move on to the first substantive item, which is the external audit update, revised audit findings and value for money arrangements. So I'd like to invite Peter Barber from Grant Thornton to present the report, please.
Thank you, Chair. Members of the committee will recall at the last meeting back in November, I presented the audit findings report for both the council and the pension fund. At that point, our work on the pension fund was complete, and I indicated that the council audit was approximately 90% complete, and that we hope to sign off the council audit in December. This on reflection was a little optimistic, and as of today, our work on the council audit is much more progressed, with work in the key areas of pensions and groups complete, with a very small amount of work outstanding in the areas of property, plant and equipment and investment properties. There are also some internal work that we need to do as a team, review points that need to be cleared before we will be in a position to finally conclude and issue our opinion for 1920. Importantly, our work since the previous meeting has not identified any material errors that we need to bring to your attention as those charged with governance. And included on today's agenda is our updated version of the audit findings report for the council. And this reflects the additional work that's been undertaken since the last audit committee meeting. What I will do, Chair, in a minute is hand over to my colleague Sophie, who will talk the committee through the main findings from the additional work that's been undertaken in the intervening period since our last report. But I know I spent a little bit of time doing this at the last meeting, but I just wanted to provide a little bit more context in terms of this year's audit and why, despite our best intentions of a December sign-off, our opinion on the council's financial statements remains outstanding. So firstly, just to pick up the wider context, this was discussed briefly at the previous meeting. 1920 has been a real challenge for both us and yourselves. And this is in the main down to a combination of COVID and the challenges of working remotely. But it is also very much us really adopting what I consider to be an even more rigorous and in-depth review of your numbers, predominantly driven by the feedback from our regulators. Ultimately, given COVID, the government did extend the deadline for sign-off to the end of November, but that has clearly been insufficient across the entire audit profession. Public sector audit appointments who oversee the appointment of auditors concluded that only 45% of audits nationally were signed off by that 30th of November deadline, so less than half. So Baines not achieving that 30th of November deadline is not out of line with others, and arguably out of line with others that have much more simplistic accounts. From our perspective in Grant Thornton, as at the end of January, so last week, I think we were up to 140 accounts signed off out of our 200. And that is a better position than the position nationally, where I think of the 500 or so councils, pension funds that require signing, 200 remain outstanding. So I think it's important to say that you are by no means the exception in not having your audit completed for 1920. It is regretful, and rest assured that the continuing delay is not something that we want. But I think it does really reflect the sheer volume of work that our team has now to undertake to gain sufficient assurance and discharge our responsibilities for the year. PSAA have noted a range of reasons for the slippage for 1920, which is down in the main, I think, to COVID, and all the other factors they've mentioned are relevant to Baines. But I think it's worth just reminding the committee that Baines is more challenging, and it's really due to the fact that you have a very large asset base, you have a very large property, plant, equipment figure, you have a very large investment property portfolio, and that is really the focus of our attention, as it is with colleagues at other audits. But because you've got a much bigger base, the sample sizes are incredibly challenging. And I suppose also just to remind you that obviously 1920 is the first time that you produce group accounts by consolidating ADL Limited. And it's really probably also worth me mentioning at this juncture that, once again, we're saying thank you to the finance team at Baines, Gary, Giles, Jamie and Andy, who have done a sterling job in furnishing us with the information and the additional evidence we've asked. We've come back and asked them numerous times for more and more information as we delve further. I do recognise that puts a strain on the finance team, so they're trying to do that whilst doing the internal stuff and preparing for the budget for 21-22. So it is regretful that the work continues, but we really are very, very close. But it hasn't been a straightforward audit because of the unique position that you're in terms of the way that your balance sheet is made up. So I just really wanted to provide that context to why we're in this position before I hand over to Sophie, who will take you through a little bit of the detail. Chair, are you happy for Sophie to dive straight into the detail, or would you?
Yeah, sure. Well, I'd like to just check with members whether they've got any questions specifically about timing and delays and things. I mean, I think we ought to have a pause there and just give people opportunity to ask. Can I? Has anybody got questions?
No. Oh, sorry. No, Chair.
Indicate in the chat. Indicate in the chat if you want to speak, and we'll do it formally. Yeah. Councillor Blackburn, would you like to?
I know, Peter, when you were speaking to us last time, the ADL ACL accounts had probably come in quite last minute, and you were hoping that things were going to be signed off. Of course, there's a couple of months have disappeared since then. How much more of a challenge has that been? Because you've made quite a reference to our large asset base and extra large commercial estate, but that hasn't changed particularly from previous years. Is it the way the group structure has changed things that has needed far more clarity for you?
So just in terms of the relative impact on the audit, we have reduced the materiality at the council this year, and materiality drives our sample sizes. When I do hand over to Sophie in a minute, she'll talk about some of the sample sizes, but I think the biggest impact has absolutely been the huge amount of additional work that we've done on gaining assurance over the basis of the valuation of your assets, whether they be your property, plant and equipment or your investment properties, and really the source data that your valuers, plural, which is a development that we weren't fully cited on in previous years, the source data the valuers have used to arrive at their figures and their assessment, and the amount of time that we spent going back and forward with them to gain sufficient assurance. And Sophie will elaborate on that. That has absolutely been the biggest impact. But, there's been a massive impact on your own finance staff because of ADL. The accounts are much more complex now because not only do you have the primary statements for the council, you also have the primary statements for the group. So there's a lot more primary statements and disclosures. So that has involved a lot more preparatory work for finance officers. But when we come to do the audit, it necessitates us doing a whole lot of extra audit procedures, engaging with the ADL's auditors, reviewing their working papers. And once again, that was quite a late piece of exercise. But even if I'm pleased to say that that's now complete, and Sophie will talk to you about that. That's now been done, and that's all been cleared since our last meeting. The small bits of areas which are still ongoing, and they are really small, is around property, plants and equipment and investment property. But actually, over the last 2 or 3 days, just before this meeting, we've now, I think, and Sophie will correct me if I'm wrong, I think we've had everything we need and asked for from the council. So it really is, the ball is absolutely in our court now to get it over the line. I'm digressing here slightly, but one of the reasons why I'm not in a position to sign off immediately after this meeting is because I need, based on my review and Sophie's review, to get our in charge, Liam, to go back and just respond to a couple of queries I've got before I'm absolutely confident to sign off. Liam is on leave this week, and he's back next week, and he's committed elsewhere for the first couple of days of next week. you know, I don't want to embarrass Sophie, but you know, I cannot put any more pressure on Liam, because the amount of time and effort that Sophie and Liam have put in over the last 4 months has just been crazy, and evenings and weekends, and I'm desperate for them to get this last bit of work done so we can sign off. But at the same time, I'm minded that I cannot push them any more than I'm pushing them at the moment. So it is down to us now, and we are equally desperate, as no doubt all of you are, to get this over the line. What I would say is that when we do get there, I think you can, as those charged with governance, reflect back on the fact that actually the accounts are well produced, they're complete and accurate. You know, as I said in my introduction, we found no more material errors. I think it's not just a case of them that there being issues about the production accounts. It's more about the amount of work that we need to do to enable us to get sufficient assurance based on our more rigorous approach than we've adopted in previous years. Councillor Blackburn, I'm conscious that's a very long answer to a very short question, so apologies for going on. I'll stop.
Thank you for it.
And Councillor Furze, you got a question?
No, my questions were answered in what Peter's just said. Thank you, Chair.
Okay, thanks. I mean, I think I'd just like to, from my point of view, I think we all understand the difficulties of COVID, and you know, we've all experienced them ourselves in our own working lives, and you know, I think what is disappointing is the fact that the last meeting, the indication was that you got days, possibly a week's worth of work to do. So I mean, I think that, and we're 2.5 months on and we're still not finished, and we're saying we've got a bit of work to do. I mean, you know, as chair of the committee, I signed the accounts off on the assurance that there was a few days work left. So the accounts are signed anyway, even if you found something material, the accounts are signed off, aren't they? So I mean, I think, yeah, I think it's the communication thing that I think I'd highlight rather than anything else, is to be in a situation where we were told at the last meeting there were days left, and to be told there are days left 2.5 months later, that's the thing I'm finding a little difficult to square, if you like. So yeah, if I was going to highlight something, it would be the communication around that, I think.
Yeah, and if I may, Chair, I think that's a valid point. I think that I think what I would say is that we knew that the areas that would be the areas that would be most difficult at the outset, and we did, interestingly, prioritise property, plant and equipment and investment property. That was the focus of our work. It's been going on for an awful long time, just because of the sheer volume of work. I think what happened was that when we got to the meeting in November, there wasn't a lot at that point that was outstanding. But the few points that were still outstanding on PPE and the investment property, when we got the further information, it raised more questions and more queries. And one of those was the fact that your main valuer were using subsidiary valuers to arrive at some of the valuations, and that required us then going back to all the subsidiary valuers that you used and getting their qualifications, their expertise, looking at their detail. So there was a lot more. And I suppose the other thing I would say is, yep, 2 months, and it's not an excuse, but the Christmas period, because we've been so keen to progress as many of our audits as possible, a lot of our team have built up so much annual leave by the end of the year that if they didn't take a lot of December off, they would have absolutely lost all of it. So we had very few people in for the last two and a bit weeks of December, and obviously that was an element where clearly very little progress was made. But I appreciate the context and the communication issues that you've raised.
Yeah, okay, thank you. And I'd just like to pay tribute to our own finance staff as well, because I mean, they, I believe, got the accounts finished by June, or is it June or July? But you know, thanks to them for their incredible efforts during COVID. Yeah, I just like that recorded. But okay, thank you, Peter. Do you want to move on to Sophie? Yeah.
Yeah, Sophie, you okay to go through a bit of the detail on the report?
Yeah, absolutely. Thank you, Pete. Thank you, Chair. So as Pete said, it was a perfect storm this year, with significant challenges due to COVID and also due to the remote working factors as well. So the audit findings report has been updated since the one that we took to you in November, and I won't cover the entire report because there are great swathes of that are unchanged in effect. But if I could just draw your attention to page 6, under the conclusion heading, where you'll see that previously in the November report, we did have a number of items outstanding on that. So we had journal entries, review of the group entities, which was almost complete, some areas to conclude on borrowings, cash and investment testing, the conclusion of the pension liability testing, a number of items of operating expenditure, grants, revenues and expenditure cutoff, financial instruments, disclosure points as well, around senior officer remuneration testing and some payroll testing. So I'm pleased to report that is all now complete. So when we issued this report, this was about a week and a half ago now, we had a comment on here around that we had 2 items to complete on property, plant and equipment, 1 item on revaluation testing of investment property, and then 1 response outstanding from the third-party valuer, plus an investment property income testing item. So over the last couple of weeks, we have had that information through, and we're just working through that now. So we are now in a position to conclude. It's just subject to our final review of those last few pieces of information. However, as you can see, we are 99% of the way there at this point in time. So in terms of the significant risks, which are on your page 22 onwards, we've been able to conclude on page 8 for the COVID-19 specific risks. So as we reported to you last time, there are 2 material uncertainties that you need to be aware of in relation to COVID-19. The first of that was a material uncertainty for the land and building valuations, which, as Pete has said, has significantly driven the scope of our work. As Pete mentioned, Baines it really does have a significant property base, one of the largest ones that I've certainly seen. And in terms of the sample testing, we've looked at, for example, with investment property items, over 100 items of investment property as part of that work, to give an idea of the scope. So the council has updated its draft accounts to include a disclosure for that material uncertainty. We've also made a note here that the financial challenges in the medium term have also increased due to lost income, additional costs, and the uncertainty of future government funding in respect to COVID-19, which was also a significant proportion of our work. Just going on to the next 2 pages. So previously in the report that we produced last time, we just had a couple of areas to cover off on these. We've now been able to conclude. So on income from other fees and charges and management override of controls, which were our 2 significant risks on that page, we have concluded that we have not identified any significant issues. Page 10, valuation of investment property, we have concluded, and that was just subject to that last valuation query. Again, there is an emphasis of matter in the audit opinion and in the accounts in relation to the increased uncertainty as a result of COVID-19. And that's very similar again for page 11, where we said on this we were yet to conclude on 10 valuations. We have now concluded on those, just subject to that last little bit of review. We do have 1 additional recommendation as a result of the work that we did here, which I will cover in a moment. And then on page 12, pension fund net liability. This area has been expanded in year. Again, there's another material uncertainty here associated with the council's pension net liability. And again, this is referred to in our opinion under the emphasis of matter. Again, it's been an area that's been really complex this year with McLeod, the Goodwin case as well. And this is the largest liability in the council's accounts, so that's been a significant area for review. Page 13 and 14 just conclude on the group accounts, which were, as we mentioned, outstanding, as we're just waiting for a few little bits as at November. Those are now concluded. This was another significant new area of work for us in the year, as it was obviously the first year of group accounts for the council. And so, as you can see, there was a significant amount of testing that needed to be carried out. That involved writing to your third-party auditors for the subsidiary and also reviewing a sample of their work. However, pleased to report that we've not identified any significant issues in terms of the creation of the subsidiary ADL, and we just conclude that on page 14. Page 15 and 16 are substantially unchanged, as is page 17 and 18. It's just we've added in the green conclusion there for the pension net liability. Page 19 is substantially unchanged, and page 20 as well. We also have no further findings of ongoing concern, so that was concluded in November and that remains concluded now. So if I'll just go down a few pages, missing out again value for money, which we did conclude on last time with the unqualified findings on value for money. And I'll just go down to page 47 of your pack, which is page 33 of our report, which is the action plan. So we do have one additional finding just to report to you here. This is not an adjustment, but it is just an effect on the control system in effect. So one of the items we identified was that when we were reviewing the source data used by your valuers, we did highlight the scope for some additional review by officers for some valuations. And as part of that, we recommended that the information was accessible for auditors during the course of the audit. That did require some back and forth with the third-party external valuer. As part of this as well, we are also going to raise a minor recommendation, and I will say this verbally, but this is just around retaining documentary support for valuations in general. We did identify some evidence in terms of the schools adjustment for modern equivalent asset base, which again, we just needed to seek further clarification from officers on that. So again, it's more of a control point, just ensuring that all that information is accessible for auditors in future years. And you'll see the management response there as well. So just running down the audit adjustments, we reported the audit adjustments last time. Again, there was no impact overall on the statement of financial position, the comprehensive income and expenditure statement, and the total net expenditure. That has not changed. We have no further adjustments to report to you. We do have some additional disclosure changes. We mentioned the financial instruments point on page 50 verbally at the last meeting, so that's now been put in. And we also had some other minor disclosure issues which are just reflected. So this table is a little bit longer than the one in November. There's nothing on there which is significant other than the financial instruments point that to report to you. And on the following page, page 51, we have the unadjusted misstatements. Again, I believe that was on the November report, so that again is not new to report to you. And that brings us to the end of the report, so I'd be more than happy to take any questions.
Thank you very much, Sophie. Does anyone have any questions on the content of the revised audit report? Would you like to indicate in the chat, or Ms. Councillor Furs, you were waving there, I think. Yeah.
I'm just typing waving. I'm trying to do everything, unmuting. I haven't got enough hands. If I may, Sophie, medium-term financial strategy, which is on your page 33. Yeah. You mentioned that you continue monitoring and of that financial strategy. And especially on did I read somewhere else? There was about a £10 million savings that need to be achieved. Yeah, sorry, on page 34. That's it. Follow up prior year recommendations. Okay, so there's a £10.9 million savings gap that needs to be monitored, which is fair enough. But now that is changed. That figure has changed substantially, and I suppose the open question was, you know, we're not alone as a council with a deficit gap that we're having to deal with, and we hear that one of the longer term strategies is to this additional deficit that we're incurring through COVID and other means. will be spread over a number of years rather than trying to close it out all in one financial year. And I wanted your view on that and as to how you may tackle or view that. Sorry, Peter.
Yeah.
If I may, Chair. So
Sure.
just to clarify, Councillor, first, if I can, in terms of that particular point, that is, as you say, it's a follow-up on the prior year recommendation. So that £10.9 million context would have been raised July 2019 as part of the 18-19 audit. So that was a position that you faced pre-COVID, and clearly our updated position against that is recorded on the right-hand side. Just in relation to the deficit gap, clearly things have moved on significantly since then, and as you say, you know, there is ramifications of COVID for you in terms of your medium-term financial planning. I think it's fair to say that over the last 9 months, clarity has emerged from government to the extent of the funding that will be provided to offset, you know, the additional costs you've incurred, but to a greater extent the loss of income that's been significant for the council. So we are acutely aware that as the 19-20 year progressed, as the 2021 year progressed, there was a bit more confidence about the level of funding from government, and actually some of the pretty large gaps that were being quoted in the early part of the year reduced significantly, but you still ended up with a slight deficit position, and there are potential ongoing ramifications to this, and there is a lack of clarity over the continued funding into the medium term. So there is, by definition, a need to take an incremental approach to addressing that gap. You know, there needs to be a recognition that you need to cut your cloth accordingly, but clearly at the same time you don't want any knee-jerk reactions of, dare I say, cutting services or citing provision or raising the threshold for certain service provision, if then subsequent evidence or information emerges that suggested that you didn't need to be as strict in terms of your decision. So I'm not sure if I explained that very well, but
you have. I think you have. I think, yeah, I understand that we don't want knee-jerk reactions, but we have to address this this much bigger deficit. And I think this page highlights the fact that we started with a 10 million or 11 million pound savings gap, and that now has increased substantially, and it's not all going, and it can't all be addressed by a service cut provision, service cut. So some of the magic has to happen, doesn't it?
Yeah, and there's clearly the budget's being set at the moment, and full council will meet later on in the month to approve that. And there's been lots of lobbying central government about what is the maximum increase that can be done. The 2% plus the 3%, but there's also talk about whether that would go any higher. And then you've got the issue about use of reserves in the short term to plug any gap while, services are redesigned if that's necessary to make them more efficient and the changing needs of your people. So there is this incremental requirement to, one, not take any knee-jerk reactions, but if there is a continued evidence that you are spending too much, then some difficult decisions are inevitable. And you are, as a council, let's be honest, you are more susceptible to the risk of reduced income into the medium term because of your large investment property base. You are much more reliant than the typical council on your income streams from fees and charges.
I know, and it's it's worrying. That's all I can add, Chair. Thank you.
Thank you. Has anybody else got any questions on the content of the report? No, I don't see anybody waving. Oh, yes, John Barker.
Can you hear me now?
Yes, we can hear you now.
Yeah. I'm afraid I lost the sound for a few minutes when Peter was making his introduction, but I think it was in response to the comments that you made about the delay in completion of the work. pardon me if I missed Peter's comment or response, but my question would be lessons for the future, because clearly there will be some audit work which is about to start in the spring for the next audit cycle. Are you confident that the resourcing and the influences around leave and specialisms to complete the work will be in place for the next audit cycle? That's my first question. The second point is, because of the considerable delay through quite a high proportion of major authorities this year, do you foresee any likelihood of the timescale being relaxed formally for next year?
Thank you, John.
Thank you, Councillor Barker. Yes, you're absolutely right. In any normal audit cycle, we would be probably bringing the audit plan for 2021 to this committee. Audit is a retrospective exercise, but I'm conscious there's only less than 2 months of the financial year left, and you don't have a plan. And that is because nationally, as are other firms, we are prioritising our resources in completing our 1920 audits. So we are much further behind the audit cycle. The suggestion is that the deadline at the moment for sign off of the opinion for 2021 will be the end of September, although I do hear noise in the system that the 30th of November is being bandied around again. Time alone will tell. Clearly, from a firm perspective and an audit perspective, we are keen on the 30th of November and not the end of September. But as I mentioned in my intros, we do recognise that the later deadline means that we are engaging with your finance people for a longer period when arguably they have other priorities in terms of in-year monitoring and setting the budget for the following year. So the fact is that there is lots of uncertainty about deliverability next year. And when I say next year, actually it's 2021, but it's our next year. There is lots of uncertainty compounded by the area that I'm going to talk to you about in a minute, which is the second part of our agenda item, which is the new value for money criteria, which has been introduced from 2021, which is more involved and will require more work on our part and on your part.
Okay, no, that's helpful. Thank you, Peter. I may come back to timing when you introduce and speak on part two. Thank you, Chair.
Thanks, John. Yeah, and I think certainly my questions will probably sit better after the value for money presentation, because I think you were starting to head towards the things that I perhaps have some concerns about. Given the experience this year with the increased workload of the new value for money requirements for next year. So if you want to head on to that part of the presentation, I think that would make sense.
Okay, thank you, Chair. So we're now on to, it starts on page 59 of your papers, headed up the value for money update. So I'm not going to talk through all the slides, but slides page 63 just outlines the new code of audit practice, the code of practice for value for money. So just to be clear here, in the commercial world, us as auditors would come in and we would sign off the accounts to indicate that they present fairly the financial position of the entity and the transactions in that period, and that would be it. In local government and in the public sector, the responsibility of the auditor is extended to also include the value for money conclusion. And when we talk about value for money, historically, what we've been asked to do is review your arrangements and say whether, in our view, you do or do not have arrangements in place for value for money. And we can issue a clear one, an except for, which means yes, you do with the exception of X and Y, or we can say no, you don't. And that's when there's lots of concerns within the organisation. And that work is not covering everything. It is based on criteria set by the National Audit Office, and they set that criteria every 5 years. And 1920 was the final year of the old criteria. So they went out to consultation. They engaged with all key stakeholders, including councils, auditors, etc. it's a bit of a generalisation, but the feedback was that the current value for money arrangements were quite high level, did not go into any detail, were reported by exception, but nonetheless gave a definitive view on whether arrangements were good or bad, because you had this binary, yes, you do have a VFM arrangements in place or you don't. So they reflected on that and they came back with a proposal with effect from 2021 of a new enhanced VFM approach that interestingly will remove the binary, yes you do or no you don't have arrangements in place for value for money. So that no longer exists. They've changed the criteria. So they've on page 65 of your papers, you'll see that they've kept in the middle one, just given it a slightly different title, which is Sustainable Resource Deployment, Financial Sustainability. And given, you know, the impact of austerity in local government for many years, combined with COVID, clearly there isn't a council out there that doesn't have significant financial challenges. So the importance of a review of your arrangements for budget setting, monitoring, reporting, responding to variances, cost cutting, medium-term financial planning, all those sorts of things remain equally applicable, and they will continue within the new code. Informed decision making falls by the wayside and now it's replaced by governance, you know, which is something particularly relevant to this committee. And it is, you know, I think it's fair to say that governance within local government tends to be very well controlled. There's very clear structures in place. Decision making positions, decision making is made on normally on complete and accurate information. Lots of hoops to jump through. You know, some people would say overtly bureaucratic, but there is a recognition that as councils work more collaboratively across tiers with health, with the third sector, it becomes harder to ensure that you have sufficient oversight, but you don't make it bureaucratic on the same basis. So there will be more work done looking at governance. And then the third area is the 3 E's, which replaces working with partners. And that is really about, you know, bang for your buck in terms of actually you may be maintaining spend within budget, or you might be delivering services, but really for the money that you're spending, are you getting best outputs and outcomes for your stakeholders and your residents? So each of those areas will be a focus going forward. Rather than reporting by exception, we will have to make detailed commentary on each of those areas, and we will need to include that commentary in a new auditor's annual report. So on page 66 of your papers, you'll see that we no longer will be doing an annual audit letter with effect from 2021. We will be doing an auditor's annual report. And within that will include all our opinions on the accounts and VFM, but it will contain much more detailed narrative. It will be more detailed in terms of where we think you're doing well, and identifying best practice that can be shared elsewhere, but also where we think there is scope for improvement. It will include recommendations where we believe there is scope for refining your arrangements to improve them further. So it will be more detailed. And whereas the annual audit letter comes at the end of the audit cycle, after we've issued our opinion, the auditor's annual report will need to be issued at the same time as the opinion and when you publish your final version of accounts. So coming back to Councillor Barker's point about timing, that places an additional pressure on us to capture that more detailed auditor's annual report in a timely manner to go out at the same time as the opinion on the financial statements. In terms of timing, resourcing and fees on page 69, you know, we are currently, or we will shortly be planning and identifying those risks, and that will involve an element of engagement with the council, and it will be much broader and involve more people than we would have historically spoken to under the old arrangements. We have sought to recruit more performance specialists to come in and assist us with this work. So we do have colleagues in our local government advisory team that will be doing some input into this work. I think it's fair to say that we aren't fully resourced up there to do that yet. It will involve more work, which will have fee ramifications. Clearly, the fee ramifications are being discussed at a national level with public sector audit appointments because they approve any fee variations. And when we do produce the plan, we will be articulating to you the impact that has on fees. So, Chair, I'll probably stop there, and I'm happy to take any questions on the new VFM approach.
Thank you. I mean, I think I'll jump in first this time, and I guess, I say, given the experience this year with which we acknowledge is an extraordinary year, but given that experience, I think there are obviously questions of capacity, which you've just been talking about. I mean, if this is do you have so my first question would be, do you have an idea of the scale of increased effort and increased capacity you're going to need in order to fulfill this generally as a company across the public sector audit work that you do, and then specifically for Baines for the audit work you do? And then it just also seems that there's a capability question as well. I mean, I think you started to address that there, that this sounds like it requires a different skill set to the kind of skill set that you've been previously bringing to bear on the audit. You know, there are different kinds of assessments being asked of you here. You're being asked to audit something different or differently. And I think you acknowledge that in saying you're trying to recruit, but do you have a view on the kinds of, or do you want to expand on the different kinds of skill set you're going to need in order to fulfill that new VFM requirement?
Yeah, happy to pick up those 2 points. So in terms of the impact on the workload, a figure that's been bandied around nationally is about 20% increase in workload. And, you know, in terms of how that pans out for Bath and North East Somerset, I wouldn't expect that to be out of sync with that. Recognising that, you know, if I look back on previous years, probably 70% of our works is opinion, 30% VFM. You know, it will be a significant increase in the workload on the VFM side. And in terms of resourcing and delivery, not every audit for 2021 will be complete by the end of September or the end of November. There will be a large number that slip past that. Unlike Baines, there are a number of audits that remain outstanding nationally that are outstanding not because of resource challenges on our side, but because of issues on the audited body side. And, you know, that they will invariably, there will be ramifications for them in terms of prioritisation of our resources going forward. And it may well be that a number of councils, given all the other pressures they're under, may decide that they are receptive to having a later start and a later completion target date that doesn't concur with the timelines that have been set nationally. You know, there are 200 plus councils that haven't had their accounts signed off this year, and we're in February. So you know, that is a discussion that we need to have with a number of councils to work out what is best for them in terms of when we undertake our work. And in terms of the skill set for value for money, I think, you know, I think we do have within the existing teams a lot of the skills required to discharge our responsibilities in that area, particularly around the middle criteria of financial resilience. You know, I think we have for a number of years been quite effective in reviewing the robustness of budgets, the budgets that have been set, how they're being monitored and challenged by officers and cabinet in year, and how they're being reported at year end, and how they are then how councils are planning into the medium term. I think the governance and the 3 E's less so, but that is that we do have a existing local government advisory team that are quite well resourced and have been doing and have historically been working in councils that are not audited by us and bringing in that experience to bear there. And we will be making a greater call on them. And we also recognise that they have increased their numbers. But, you know, it would be naive for me to say that we are fully resourced up to deliver it across the whole of our portfolio.
Okay, thanks. And I guess it seems to me that possibly, particularly in the 3 E's box, that feels like there's more subjectivity there, isn't there? I mean, isn't there more bringing professional judgment to bear? You know, how do you measure efficiency and effectiveness, for example? I mean, you know, I'm sure we've all experienced in our own working lives the attempts of people to measure those things. It just feels like you're being asked to do something which is a more subjective thing there. Would you agree, or do you think that there are strongly objective criteria you can apply to that?
No, I agree. I think there's a large degree of subjectivity involved. You know, I think every council is different, but I think there are lots of similarities as well. You know, there are various benchmarking databases that are circulated in certain service areas. You know, we will be comparing and contrasting how different councils, you know, inputs and outputs. But we recognise that there needs to be a degree of caution when interpreting them for a whole raft of other reasons. So you're absolutely right. It is more judgmental, subjective, and that's what we will need to exercise when we review and conclude.
Thank you. Has anybody else got questions on the new value for money arrangements? Anybody desperate to ask anything? John, would you like to chip in? Yep. Feel free to unmute.
Thank you. Yes, I should be unmuted. Yeah, my question picks up in a way from the chairs, and that's the local discretion or the degree of discretion around the value for money audit agenda, and how the three criteria could effectively relate. Can I just use an example? How a local authority, and you can speak in general terms, Peter, rather than just for this particular council, if that's more appropriate. How, for example, a local authority, major local authority, would or should be addressing climate change. That clearly is going to be a major agenda over the next few years, because clearly the three stages of the criteria, governance, financial sustainability, and then the outcomes, if you like, have a natural flow. And I'm thinking in terms of an audit, if you were looking at the decisions and the quality of decision making behind the governance mechanisms, and then followed by the robustness of financial sustainability, looking, for example, at various alternatives for financing a climate change agenda, not just in the year of audit, but in the foreseeable future. And then finally, a dialogue with the council in terms of how effective the agreed arrangements are, both in the year of audit and likely to be for the foreseeable future again. Is that the sort of framework in practical terms and reporting terms that you would expect to see as a result of your work? Or is there some other mechanism that you think you would be adopting to maintain the three criteria in tighter ring-fenced sections of your work?
Okay, I'll try to remember all of that, but I think it's probably worthwhile first saying that, you know, in terms of the way that any individual council operates, there is quite a clear structure and, you know, framework in which it operates. So there are, you know, the statutory services, the discretionary bits, and the grey bit in the middle. So it is not for us as auditors to comment on democracy and what a particular council's administration decides to prioritise in their corporate strategy plan, etc., recognising that council operates within that framework that restricts to a certain extent what it can do. So we are keen to, so if a particular council administration decides that climate change is, you know, is a real area of focus, and that's where they are comfortable in investing because they see it as a priority and it's in their corporate strategy and it's articulated, then fine. If another one is less inclined to do so, that is the prerogative of democracy, and that's how democracy works. What we're interested in is how, in setting the aspirations of the council that's articulated in its strategy and its etc., how it is how it is implementing them in the most efficient and effective way. So it is really about, once you decide to do something, and you set your priorities, you do the financial consequences of that, and the costings, that you implement that and you deliver that whilst providing good quality, good outcomes for your people based on that wider aspiration as articulated in your strategy. So I'm not sure, Councillor Barker, if I've said that well, but it's really how, once you decide what you're to do, assuming that what you've decided to do is in accordance with the expectations that's set on you based on the role of a council and the discretionary element within it, how well you're implementing that.
Okay, thank you. Just one thing, Peter. I'm not an elected member. I'm the independent professional advisor. So, sorry, point of detail there. But I realise independent on the screen could actually be political independent. Sorry for any confusion there.
No, I do realise that when I was referring to the administration, I mean the administration decision making.
Okay.
It was the councillor reference I think that he was referring to.
Yeah, there was one other point. I'm not sure if I highlighted it enough, and that was your expectation of the degree of freedom for individual local authorities. We have a formal engagement relationship to choose the areas where you should focus on your audit as either as a topic or a theme, or would you expect there would be sort of a national call-off list, which is then modified for local application? I'm sure you remember going back to the middle term of the Audit Commission. There was an annual programme of sort of flavours of the year that had been discussed at I think with the LGA initially and central government, and then was offered down to individual local authority clients, where the Audit Commission had a higher degree of central direction. But I'm assuming that in the new or the current arrangements that you will have a little bit more flexibility to negotiate and have a dialogue with your clients around the key issues in the new agenda. Am I right in that? The NAO code obviously has within those three criteria provides a more detailed breakdown of the elements that make up that and the areas that auditors may wish to consider. Whether you're referring to the CLOEs, the key lines of inquiry that we used to do, the comprehensive performance assessments of the old days, possibly, but there are risk factors that are set out that we would look to see if a risk factor is deemed to be in existence within an individual council, then that would influence whether we want to dig around and do some further work in that area. As to whether a council can choose an area, I think it's probably fair to say no, but we would be very keen to engage with you to understand where you feel as a council that you would welcome further review because of X, Y, Z, and if that's consistent with an area where we think there would be benefit in us reviewing, no doubt that will be an area that we would potentially explore. But we've got to be very careful here that we don't, as auditors, we are not directed by the council. So if you said you wanted a particular area looked at, we could only look at it if we generally felt as auditors that was a risk that needed reviewing to discharge our responsibilities. Yeah. Okay. No, that's why I use the term dialogue with your engagement clients rather than a right of imposition or veto. But no, I think that clarifies the position. And clearly, it's early days for the new framework, and both parties will. Parties to the audit relationship, not political parties. Parties will want to get the best value out of the new framework for the arrangement. Okay, thank you, Chair.
Thank you, John. Anybody else have any questions? Please indicate if you do. Nope. Okay, thank you very much. Thanks. And thanks, Peter, and thanks, Sophie, as well, for all your work for us over the last 12 months. So thank you very much. We do now move on to a a period of debate or discussion if we wish to. I don't know if people have got things they want to raise. If you'd like to, then please do indicate in the chat or wave. I can see you all, I think. So if there's anything you'd like to raise, then please do. Okay, Colin Blackburn. So Councillor Blackburn, would you like to start?
Yes, thank you, Chair. Just wanted to really talk about, it's really interesting to hear about the sound like a huge workload impact that our now group account status has brought to the table, especially around valuations, different types of valuations. I mean, our property part of our organisation has always been, as Sophie rightly said, is one of the biggest that's out there. So it's really important that we get it right. We've gone down the road now of creating Aqueous, and they now come under this corporate audit that we sit on, a scrutiny, but I don't think I've got really an understanding of what we should now be looking for in that element of the accounts. We know the way forward as what we're looking at and trying to look for, and what is going to the governance side of going into the individual elements. But Aqueous and that side of it, I mean, one, do we know the extra cost to us as a council for actually even having that type of property arrangement, and what is the implication? Because it sounds like it's brought a lot of work to the table. The governance part of that is understanding where it is, and where do we come into that, you know, and what to transparency of that intercompany position. I think we were given quite last minute information, and we were told it was what was holding things up to be signed off. I mean, there's a huge issue there of there's interco loans, if you like, between the council and the wholly owned companies, but then they're using some of those loans to buy assets that are then to be renting assets. So it's that transparency that I suppose our residents are looking for us to make sure that as the last stop, if you like, of audit, what are we doing to look at what we're getting? You know, there is that thing about value for money. Mm-hmm. And ADL ACL is in itself should be scrutinised for what that means, because we hear of, I mean, I'm sure maybe Andy Rothery can give me some direction on this, but there's things about bonuses and targets, and the transparency about how they've been achieved to date. We've got the whole council with mechanisms with a 300+ million budget, but this is a 5 million operation. So surely we should be looking at different numbers and different triggers, and how do we do it? So I just wanted to throw that out there, Mark. It's such an important part now of what we do. There's a call-in coming in next week over the potential sale of an asset to a company, even though it's an internal sort of wholly owned subsidiary, lending money to buy an asset below its valuation. So that's what the call-in's going to look at. But of course, when I hear what I've heard today about valuations and subsidiary valuations and what have you, I can't talk to a resident and give them a clear picture about what's going on.
Sure. Yep. I understand the concerns. I mean, does anybody else want to comment on that, or I mean, Councillor First, do you want to?
Yeah. Before Andy Rothery comes in, I can see he you'll defer to him at some point, but
I will do. Yes.
Yeah, but from Colin's absolutely right, and I know you and I and Lucy and other members of the resources panel have had a similar discussion surrounding this and about the roles and responsibility of corporate PDS versus roles and responsibilities of this audit committee regarding our roles and responsibilities to the council, to full council, because we're a full committee of full council, as opposed to PDS and the checks and balances on the cabinet in their decision making on ADL, ACL, etc. And And to put Colin's concerns, well, to echo Colin's concerns, really, we've had those. We're struggling to come to conclusions on those sorts of questions. Yeah. They're not easy to answer, I don't think, at the moment, and there needs to be a lot more clarity, I think, Colin, from our perspective as well. So, across the political, floor, we're all uncertain about this, and we all feel there needs to be greater transparency.
Yeah, I certainly share your concerns around transparency and clarity of roles for the various different organisations. I think probably fair to bring Andy Rothery in at this point. So, Andy, do you want to address any of that?
Yeah, absolutely. Thanks, thanks, Chair. So, to address, I think, some of Councillor Blackburn's questions in terms of aqueous and the cost of aqueous to the council, it's actually an income to the council. So the council's revenue account has a dividend target, is interest and dividend in its revenue budget. So as we're talking about the 1920 accounts, I think it was just over 600,000 basically returned to the council. And in our 2021 budget, we have £1 million target that I believe is on track. So cost is fully met by income, and that does include aqueous covering their costs as a company from the activity they do from development. So it's actually very beneficial in terms of, there is time involved, of course, in terms of the governance and officer time and interaction between council and company, but the net position is a return to the council that does support and fund core council services. Sure.
I think I appreciate the answer, and I think that the concern that certainly I'm hearing from this committee and from sitting on the corporate PDS is just a kind of is a lack of clarity around what our roles are and how we're supposed to fulfil them and what we're supposed to be scrutinising and what we're supposed to be looking at as an audit committee. If you don't mind, Andy, I think, can I pick this up with you after? I think I'd quite like to write to you formally and say we have some concerns about this. Can we get some clarity on what the roles are, if that would be all right?
Yeah, I'd really appreciate that, Chair. And I think in terms of the governance as officers, we're keen to make sure the governance is straightforward and as simple as possible, and can be understood by all. So in terms of audit committee and scrutiny, we can all make sure that everyone's fulfilling their role in the best way possible.
Okay, thanks. I'll formally take that up with you after the in the coming days, just to get some clarity around the governance structure. I think that would be a good thing. Thank you. Have we got anything else that we want to raise? Any
Chair,
other?
Chair, do we want to make a formal? Do you want to make a formal request? Oh, sorry to ask you this, but do you want to make a formal request from the committee that you got committee support to write that letter?
Sorry, I should.
If you don't mind. Is that right? And then just to make sure that we, as the elected members, that we support that, and I'm happy to second that proposal that you put forward.
So I've proposed that there. If you're happy to second, can we let's just go around the room and just and do that formally. So people in favour of me writing to Andy Rothery in his role as Section 151 officer to clarify our role and the role of corporate PDS and in the general governance structure for the aqueous companies.
Happy to support that, Chair.
Yes, I'll go around rather than hand waving. I think let's just go around and make sure. So John, are you happy to support that? Yes, he's raising his hand. And Councillor Blackburn? Yes. Myself, Councillor Elliott, yes. Councillor Furs?
Yes, Chair.
And Councillor Hodge?
Yes, for.
And Councillor Simmons?
Yes.
Okay, excellent, thank you. So I will take that as an instruction to write to our Section 151 officer. Thank you. Have we got any other things that we want to discuss relating to the revised audit report or the value for money arrangements? No, I'm not seeing anything. In that case, let's move on. We'll close that item and move on to the next agenda item, which is the Treasury Management statement. So I'd like to invite, so we've got 2 appendices that you need to see for this committee. If we should have been sent those out, I think, yesterday. I'd like to invite Gary and or Jamie, I think, to present the report. I'm not sure who's leading on that. Is it Gary?
Yeah, thank you, Chair. I'll first say I have been experiencing internet issues, so I have been kind of coming in and out. So I'll carry on, and hopefully everyone can hear me okay. The fallback is I have emailed my notes to Andy and Jamie, so if it does get unstable, hopefully one of those will be able to step in. So I'll carry on now. Someone please flag if you can't hear me. Okay.
Will do. Yep.
Right. Thanks. So the background, this report fulfills the annual requirement to set a treasury management strategy for the next financial year in line with the CIPFA Code of Practice for treasury management. So it's an annual requirement. The strategy covers how the council manages its cash flows, borrowing and investments and the associated risks aligned to those. I think it is important to highlight that these activities need to operate within the boundaries the strategy sets, but it's also important to know these are high-level boundaries, and in day-to-day activities we do adopt a flexible approach and we do adapt to both current market conditions and advisor guidance. An example of that will be that we do sometimes kind of limit counterparty durations on our investments if market conditions changes. So although we're setting a kind of boundary in the strategy, we do kind of operate within those limits, and we can flex the approach depending on the market conditions. So that's a kind of key thing to take on board. So the strategy needs approval of full council, so it will be on the agenda for full council meeting on the 23rd of February, and also Cabinet will recommend the strategy to council, so it's on Cabinet's agenda on the 11th of Feb. It comes to Audit Committee, as you'll be aware, in its duty to scrutinise the plan, which is also required under the Code of Practice. So Audit Committee is the body that does scrutinise our Treasury decisions, and that's why we bring other performance reports on Treasury to this committee. Before I go into the full report, I just wanted to highlight on the cover report the recommendations on page 74. There is a couple of typos there. So the actual recommendation is the Corporate Audit Committee is asked to note 2.1, the word recommend needs to be removed. So we're asking the Audit Committee to note the actions proposed in the Treasury Management Strategy Statement in Appendix 1 to be approved at February Council. And in Note 2, in Recommendation 2, the first word note needs to be removed again. Apologies for that, that was a typo. So just to clarify the recommendations. Okay.
No problem.
Thank you, Chair. So I'll move on now to cover some of the key elements in Appendix 1, which was on the supplementary. So I'll refer to page numbers of the supplementary pack to kind of help members follow through. So the first main issue, we set out the external context on pages 3 to 5. The first on page 3, the economic background comes from our advisors, and that's highlighting the impact of COVID pandemic on the UK economy. So it's highlighting a contraction in GDP of the annual rate of minus 21.5. So that's played out in the media, and I'm sure members have heard a lot about the impacts on economy, and that's why I won't dwell too much on that. But it does highlight it is going to take some time for that to recover, and it's unlikely to recover to kind of pre-pandemic levels, and at least until kind of Q1 of 2022. So it shows, you know, that this isn't going to be a short-term impact on the economy, and it will take time to recover. On page 4, in terms of credit outlook, the strategy does highlight the risk to banks. Now, the credit default swaps have kind of stabilised kind of on the risk to banks, but there is an increased risk on the profitability of banks given exposure to loan non-repayments as well. So we are still adopting a cautious approach to investments with banks, and we are following our closest guidance on duration periods with banks as well. So that's page 4. Page 5 covers the interest forecast going forward. And our advisors estimate that the bank rate, which is currently at 0.1, will remain around that level or at that level to at least the end of 2023. So lower rate interests are seen as being the kind of norm for the next couple of years at least. And in terms of borrowing rates, which are linked to gilt yields, they also see those being fairly stable over the next 3 years. So a slight uplift in those over the 3 years, but only kind of 0.1, 0.2 basis point. So, it's a fairly stable low interest rate forecast over the medium term. Moving on to the local context, so page 6, that sets out our current borrowing and investment portfolio. So we have been through this through the performance reports at previous committees, but just to highlight, our current borrowing level, is 244 million, mainly from PWLB, although there are some local authority shorter term borrowing there. And then on the investment side, our investments at the end of December was 81 million. The majority of that with money market funds and other local authorities. And again, highlighting our 5 million long-term investment in the CCLA property fund, which is currently kind of earning just under 4%. So that is a pickup on that fund, and it does continue to perform well. Moving on to the borrowing strategy, which is on page 7. So this sets out our strategy, and it's still in line with previous strategies. Given the very low interest rate we can earn on investments, we are still approaching a kind of trying to minimize our cash balances by using our internal balances rather than borrow wherever possible. And also, given the low interest rate environment, we would probably also look to more shorter term borrowing where needed. And that's managing both the kind of revenue cost of once you lock in borrowing, and also the fact that if we borrow ahead of need, we then have the investment risk on that money, and also the cost of carry of extremely low interest rates on that. Okay, so that's the borrowing strategy. One important issue also to pick up on page 7 is we've mentioned before the PWLB have brought in new kind of restrictions on access to PWLB loans, and you cannot access that lending if you are undertaking borrowing activity linked to buying investment assets primarily for yield. So there's been, I think we've mentioned before, there's been restrictions on this, and it was to try and prevent councils going out and buying existing kind of supermarkets and assets purely for yield. So you can still undertake activities whereas linked to regeneration jobs and other things, but not primarily for yield. And that is reliant on the section 151 kind of clarifying when we do take borrowing that it won't be for that purpose. So the strategy highlights that the council, will not be undertaking this activity in line so to maintain our access to PWLB. Moving on to the investment strategy on page 9. So the SIPFA code, the priority on investments is maintaining focus on security and liquidity before yield, and so the strategy is aimed towards that. So we will contain our short-term investments in money market funds, other local authorities, banks in short-term notice, and keep on top of advice from our advisors there. We will maintain the long-term investment in the property fund as previously stated. Pages 11 to 14 cover the approved counterparties and limits, and all of these are in line with previous strategies, so we haven't made any significant changes there. Page 15 introduces environmental, social and governance investment approach. So this is newly brought into the strategy this year, and is in response to the climate emergency declaration. So in light of that, we did commission a review from our Treasury advisors to look at potential investment options that could be considered as part of our Treasury management activities. And due to the overarching principles of security, liquidity and yield, investment opportunities under Treasury management are limited, but we are incorporating two options within the strategy. The first one, there is a specific set of longer term funds that can be permitted as Treasury investments. Now, these are quite technical in nature. They're called UCITS funds, which is undertakings for collective investments in transferable securities. Now, to try and simplify what that means, it just means there are a range of limitations placed on the fund managers around diversifying investments and also having investments that can be readily sold on the market. So it does mean there is liquidity within those funds. And they are also regulated by the Financial Conduct Authority, so they are quite strictly regulated. So the strategy allows for up to 5 million of these type of investments. I would say we do need to kind of undertake further due diligence on the types of funds to understand them. So we will work with our advisors on that before we do undertake any investment. The strategy is just setting out that this is a potential option. And we are proposing to arrange a member briefing on this from our advisors, probably to Audit Committee and some members of the Cabinet, likely to be in April, as part of this journey into considering, whether we do place these funds and whether it does meet all our Treasury and cash flow requirements. Okay, the second item there is to do with short-term liquidity deposits. Some banks do have short-term liquidity deposits that are ring-fenced for them lending to these types of environmental, social and governance type lending. So we have included in the strategy potential to place up to 5 million with these banks, obviously again subject to due diligence to understand how the fund works. And there is a bit of scope for a slightly longer duration period on those if they do meet our requirements. And again, that will be kind of delegated to the Section 151 after undertaking due diligence on those investments. So there are two kind of elements that we have brought into this year's strategy to try and address that climate change and potential investments that we can carry out under Treasury management. Okay, moving on to page 17, Treasury management indicators. So this is our standard list of indicators. The borrowing limits, again, are linked to the budget report and the capital programme. So that just kind of sets out our authorised and operational borrowing limits in line with our capital programme. The other indicators focus on investment side credit ratings, liquidity, and also maturity structure of both borrowing and investments. And as you'll be aware, we do kind of closely monitor performance against those indicators. So that's kind of the main areas I wanted to highlight. So I'll probably pass over to questions now, if that's okay with you, Chair.
That's great. Thank you, Gary. So does anyone have any questions, if you'd like to indicate or wave or something? And just give people a second if they wish. Try not to leap in. So Councillor Hodge got in there first. Lucy, do you want to ask your question?
Yes, Gary, sorry, I'm not sure whether it's right for this detail, but it was just about ethical investments and whether whether this indicates, well, Treasury Management Report, whether the engagement approach versus a disinvestment approach with ethical investments. Who determines that? There's an inquiry actually from a cabinet member for climate emergency asked me to bring forward to this meeting, and how is that approach determined? Is it who takes the lead on that when they're looking at ethical investments, whether you disengage or whether you encourage improvements within the company, and is that politically decided, or is it decided in another way? I suppose is my question. Yeah.
Okay, thank you. Yeah, thank you, Councillor Hodge. Yeah, in terms of that, the Arling Close report did kind of talk about the different approaches, and it's more from a fund manager point of view, whether that you divest yourself of any equities where the company is kind of, for example, investing in fossil fuels. And the report highlighted if you are taking a divestment approach, then in theory you're kind of you're removing yourself from having that conversation with the company about how it may change going forward. And because those shares are in the market, it just means that someone else will probably buy those shares. Whereas if there is an engagement approach by the fund manager, it's more trying to influence those companies to move more towards a more ethical or a more renewable source of investments. In terms of who kind of directs which approach to take, in terms of if we were to invest in one of these funds, we would look at what the fund manager's approach was, and were we happy with that approach in terms of the stance they were taking, whether that is an engagement approach, and that's, as a council, that's in line with our priorities and our approach. Or, if they were a divestment, they didn't want to kind of invest in any of those companies, it would be our decision which fund we invested in. So we would need to take that into account, how they were operating the fund, either on an engagement or a divestment basis.
Okay. So do the officers take a view on that? Is that how it works, and liaise with the fund manager? Sorry, on a basic level, I'm not. Yeah,
I think we would need to, we're on a journey at the moment. We've had an initial report more aimed at what are the potential investments. The next step is to actually kind of understand that report, get a briefing, and then consider what funds are out there and what approach they take in terms of engagement or divestment, and then consider how that aligns to what we may want. So that's a kind of future step once we move forward. So we haven't kind of formulated that level of detail yet at this stage.
Okay, lovely. Thank you very much.
Thanks, Lucy. And just to follow up on that, is that so? Are you saying that? So I understand you're kind of at the early stages of that process, but would that be then a decision on whether, for example, you were going to take the engagement or divestment approach? Would that be something that would end up going to full council, or would it be a decision of the appropriate cabinet member, or would it get taken by an officer?
I think it would be, in theory, under the Treasury Management Strategy, it would be delegated to kind of Andy, but obviously we would want that briefing, and we would want to take it through a briefing sessions with members to make sure, if we do an investment in one of these funds, we're happy with how the fund operates and how the fund manager manages that fund.
Okay, so ultimately it's the Section 151 officer's decision, but you're saying that the Section 151 officer would then take some sound out opinion amongst members. Is that fair?
Hello, I think my screen's frozen. I don't know.
Your
if
screen
people
has
can hear me.
frozen. Yes,
I can't hear you.
Are you back? You're starting to move again. Are you back again?
Yeah, I can hear now. Sorry.
Yeah, sorry. So yeah, just to summarise, are you saying that so ultimately it's the Section 151 officer's decision, but that the Section 151 officers would evidently seek to gain the opinion of members before making that decision? Would that be a fair summary?
Yeah, I don't know if Andy wants to come in, but I think we do need to go through that process first before we make an investment. So.
Yeah, thanks, Gary and Chair. I think in practice, what we'd do, as Gary said, in terms of the investment options we're considering, we'd have our advisors brief the Cabinet about the investments we're pursuing and advice they've given us. When it comes to actually looking at an investment and enacting it, it would be delegated to me, but I would ensure that I'm consulting with the relevant portfolio holder before making any decision, and also speaking to our advisors in advance of that investment. So we're covering things on both angles, seeking professional advice and then consulting with portfolio holder.
Yeah, apologies to labour the point. I guess the question is, so it's entirely reasonable to assume that there are a kind of equally valid investment, but one of which is taking a divestment approach and one of which is taking an engagement approach to the companies. That the fund managers are taking a different approach, and whose decision would it be as to what approach was, there's an ethical decision to make there, or an ethical judgment to make there, I guess.
Yeah, I think we'd go back to following the guidance on good treasury management about the investment, and would really take a level approach to look at the advice on the investment and test it both sides, and then take, because I think we've got to follow our responsibilities about stable and secure investment, but also make sure we're achieving that objective around looking at alternative, environmentally friendly and sound investments.
Okay, thanks for that. Councillor Furs, you had a question?
Thank you. Yeah, mine's about the borrowing and borrowing strategy. So looking at section 2.1, Gary, it says that the authority currently holds 244 million of loans, an increase of 11.1 million on the previous year. So taking that holding that 11.1 million a moment, when I look down the paper to section 4, Treasury Management Indicators and Treasury Management Borrowing Limits, we see that the borrowings for 21-22 is 408 million, and then it goes up to 426, 427, still underneath our borrowing ceiling, which is fair enough, So is that 11.1 already accounted for in that 408, and therefore we've got another, next year we're looking at another 18 million, and the year after another whatever?
So the 11 million is already borrowed, and that the 408 you quote to is the estimated level of borrowing if we spend all our capital programme and we kind of all our reserves went as well. So it's a boundary level to say, if you did borrow up to that and you did spend all your capital programme in line with what you would expect, in theory you would need to borrow that, but the Treasury Management is managing that actual borrowing in line with kind of the overall council position.
Because because the capital borrowing is not realised because it won't be completed all in this financial year going forward.
And you have to take into account that we do hold revenue reserves and that, and we would kind of use those borrowed internally first, and also capital programs do sometimes slip into future years. So it's, setting the boundary, but it doesn't mean, as I said in the first thing, that we would borrow up to that level. And historically, we've kind of not got close to the CFR.
And the 11.1 is capital. I'm sure. I just want to emphasise that the 11.1 is capital.
Your borrowing requirement relates purely to your capital programme.
Okay, thanks, Gary. Thank you, Chair.
Thank you. Have we got any further questions on the Treasury Management report? John? No, you're still muted. You're still muted, John. No, John, still muted. I'm going to attempt to unmute you. There you go.
Okay, sorry about that. I also lost the connection when Gary was talking. Had you commented on part 5, related matters, when you were introducing your report with the Treasury Management Advisor appointment, whether there's a role for the Corporate Audit Committee in the tendering or selection process?
There could be. We do go through a tendering process like under procurement rules, and we do notify the audit committee of our decision. Previously, we haven't run that selection process via the audit committee, but there's no reason why, in future, a member of the audit committee could be involved in that. We're currently kind of partway through our contract with a 2-year extension that we'll be considering. I think it's halfway through this year, that trigger point is. But it's normally that, the Treasury Management Advisor contract is delegated to Section 151. So ultimately, he would make the decision on who our advisors are based on that professional judgment, but that doesn't preclude an interest by the audit committee in that process when we get to a retender exercise.
Okay, I mean, in terms of the forward action, that perhaps it's appropriate to record that you may consult with the committee chair as appropriate then as the tendering process becomes due. Is it renewable during this financial year, or is it next financial year?
I think Jamie will correct me if I'm wrong. I think the period where we can extend for 2 years, I think, is September this year.
Right.
That's right. I think it's the 1st of October this year will be the option to extend it for 2 years.
Mm-hmm. Okay. Well, as I say, I've raised the issue. I'm happy for it to be sorted out in the appropriate way. So. Okay. Thank you.
Thanks, John. Any other questions on Treasury Management? No, I'm not seeing anybody, and nobody's raising anything in the chat. So thank you very much, Gary and team, for that and for your work during the year on the Treasury Management. I think we'll close that item and we move to the final agenda item, which is the internal audit plan, and I'd like to invite Andy Cox to present that one.
Thank you, Chair. Afternoon, everyone. This report is presented to seek the committee involvement in developing the internal audit plan for 2021-22, and also how we can respond during the year to any changes it progresses, very similar to this year, really. As stated in the report, and I think it's worth reiterating, the internal audit plan work is recorded in what we call the approved annual audit plan, enables the Chief Internal Auditor to assess the Council's internal control environment and therefore provides a reasonable assurance opinion, which is basically reported to this committee at the year end in the final annual report for internal audit. In order to develop the 2021-22 internal audit plan, I've already been meeting directors and also what I call key corporate officers to capture the issues and risks within their particular areas of responsibility. Using this information and using what we've called the reasonable assurance model, we come up with a list of reviews, and we compile that list and we assess that risk in terms of our resources, and that's put forward as the annual audit plan. So in addition to going through the reasonable assurance model and this process of consulting directors and key corporate officers, I will also be considering what we had in the plan for this year in 2019-20, and those audits that we haven't carried out due to COVID-19 and our response to all the unplanned work that we had to carry out. I've also referred in the report to areas for potential review highlighted by professional bodies, such as the Chartered Institute of Internal Auditors. And today I want to get the opportunity to get your input also to potential areas to be included in the audit plan. As I said, during the audit plan progress report, which was presented and considered by this committee on the 26th of November, it was agreed then that there was a need to respond to the needs of the council and for the internal audit team to carry out unplanned work. So therefore, we decided the 2019-20 annual plan needed to be kept under review and to be adjusted as necessary. And there was a number of audits there recorded that we said wouldn't be carried out because of that reason. Based on the ongoing uncertainty, I think this flexible approach is considered prudent and also reasonable for next financial year. Therefore, the list of audits that will be presented to the committee on the 29th of April of this year and contained within the annual audit plan for 2021-22 will also need to be kept under review during the year, and we will continually consult the committee, and this would most likely at the half-year stage, which will be in a meeting around about September and October of this year. What we can do then is consider what's occurred during the year and decide whether we need to reset the plan again. As stated in the report, there are two recommendations. The first one is that the committee should note the intention to keep the April 2021 internal audit plan under review and reassess as necessary. And the second recommendation is that members of the committee provide their input and comments on areas for consideration for inclusion in the 21-22 audit plan. To help discussion on this, I thought it'd be useful to share with you some highlights of areas highlighted by Andy Rothery during my conversation with him as Section 151 and Director of Finance. The first area that Andy and I discussed was really the work that we're required to do related to the government COVID-19 funding. I think at the last audit committee, I went through that and told you all about the work that would be done in terms of small business, retail, hospitality and leisure grants. Obviously, the government have made significant funding available to the council, and we need to carry out more work in relation to that in terms of post-payment review of grants. And so that would be something we will be carrying out very early on in 2021-22. Andy also raised a number of other areas, including, I'm not going to go through them in detail, debt recovery, which is obviously very important based on our financial position and the need to collect in money that we can in terms of everything invoice should be collected and how we do that. Information security is also another high profile. Everyone changing their working practices, working at home, mobile and remote working has had considerable changes in working practices. and also the security of information and data. So that's another particular area of interest. And of course, disaster and crisis preparedness, incident management, major incident management. And I'm sure there's lots of lessons to be learned from what's happened during the current year. And so it's something that we should be considering next year. So, Chair, I think I've given you some food for thought there for the committee. And I'd just appreciate any input from the committee on matters for inclusion in the 21-22 plan.
Thank you very much, Andy. Do people have any comments about or ideas around what they'd like to see in the 2021 plan? Things they'd particularly like highlighted? John.
Right. I have a question, Andy, and that's in relation to para 322, item 6, traffic signals and intelligent networks. What exactly is that?
It's basically traffic lights, John. That's probably the easiest way of saying it. Traffic signals.
What is
so that's highways. So that would be very much contract management in terms of that.
I was going to say, what would be the audit approach for the review of that element? It's
a significant spend area.
Contract management.
Yeah. So it is contract management.
Would that include contract for the CAS management system?
Off the top of my head, yes. Chair, it would.
Okay.
Right. Sorry, that leads me on to another question or comment, Chair. Clearly, there's a number of similar pressures on the other teams that make up the audit partnership. I was wondering how much are you trying to rationalise or coordinate the areas that you plan to cover to take account of perhaps staff reductions or other pressures that might come up, which could disrupt, with the best will in the world, could disrupt planned audit work through lack of resources, lack of skills, or any other external factor.
Can I just clarify, Johnny? You're talking about our partnership with North Somerset and the team we have there?
Yes. There are clearly areas, or there must be areas in a planned audit work where you would undertake similar work for each authority.
Yes. So we know that resources are stretched, and we discussed that at the last committee. The greater advantage of having two teams, and we're all going to be auditing very similar things. So, for example, grants, not only the team based in Bath, but also the team based in Clevedon are also looking at the same things. So we're able to share work programs, etc., and that makes us a lot more efficient.
Yeah. Okay. Now that's the answer I was looking for, I think. And I know that you've brought that to the attention of this committee before. Now, perhaps related slightly to that, in terms of resourcing, you have relationships with Devon County Council, and there may be other external provider sources. If there were significant budget pressures which resulted in a budget cut to Audit West resources, how might you address any difficulties in resourcing audits where you would look for external skills to be able to complete them satisfactorily?
There's two things really there, John. In terms of resources, if we had cuts, then obviously we've got to tailor our plan to the resources that we got available. The good news is because of the significant amount of work that we've carried out in terms of COVID and the response to that and unplanned work, is that we've got approval to go out to recruit a senior auditor and an auditor. So we're currently out to advertisement on that. And it's going to be really interesting to see what responses we get in terms of how the market has changed, whether people would choose to sit tight in their current roles, and also the job market's changed, and there's going to be other people with other skills, knowledge and experience that we might be able to use and train up. So that's why we went out specifically for an auditor grade, to see if there's someone we can bring in, actually train up. So that's the good news, John, is that we've actually had additional resources put our way to try and assist with the work that we've actually been given.
Right. Okay. As a sort of quasi trading unit within the council, are you subject to the same degree of constraint if there was a blanket recruitment freeze to address budget problems?
Yes, we are, to a degree. Obviously, Jeff talks to Andy Rothery in relation to that, and that's why we've actually been put in this position of being able to go out and recruit. So what you're probably referring to, John, is sometimes we have contracts with external clients that we need to fulfill. However, we still have to go through the council process to fill those jobs.
Okay, all right. Now I understand where you're coming from, and good luck with your recruitment initiatives as well. Thank you.
Okay, thank you.
Thank you, John. Councillor Hodge.
Hello, Andy. Thank you very much. I just had a suggestion really for an audit area. I don't know whether it would steer me in the right direction if it's the wrong sort of thing, but I was looking at the list on 3.3.3 and the types of things there, staff wellbeing post-pandemic, and something that has been kind of bothering me quite a lot actually is the new people strategy and the preparing for the future, and the impact on increased well-being on our increased home working on the well-being and of our workforce. And you know, with the closure of Lewis House and 4 floors of staff council officers being relocated and having a kind of different type of working pattern with really a requirement, flexibility, but actually a requirement to work 2 to 3 days a week home working. I just wondered if that's an area to look into, the ongoing, you know, the impact on well-being, recruitment, retention of posts and productivity with that kind of quite a major change in working practices, especially now. I think staff might have indicated a preference for a degree of flexibility, but having had a year of home working kind of might feel differently about it. But and my understanding is the refurbishment of the civic centre isn't going to provide office space, it's going to provide meeting space, so the home working will be there to stay. So it just seemed an important area to me, but I suppose that, yeah, if you feel, I'm not sure whether it's the right sort of thing.
No, it is the right thing. There are risks involved with that, the change of strategy. And I think the area that we could look at is how have those risks been managed in terms of identifying the potential risks and how they're going to mitigate that. So it is definitely an area that we could look at. And as you quite rightly said, people's views on home working have changed as we've gone through the winter, I think, and we're all now thinking about how we could get back in the office for whether it's just 2 days a week out of the 5 or something like that, because it does have a huge effect on your mental health. So I think, if anything, it's around the risk management of that and how those risks are being identified and documented, and what action plan is there to mitigate those risks.
Yeah.
Okay. Thank you. John, another comment from you?
Yeah, question to Andy. Clearly, the local authority has been a significant agent in some of the financial transactions through the COVID emergency. Do you have a feel for the value or volume of financial transactions that you ought to be auditing as a priority?
Are you talking, John, about the level of grant funding from government here? So
yes, where the council has been an agent in dispensing some of those emergency grants that have been provided for over 12 months now.
Yeah, so as I said earlier, we've been heavily involved with all the grants being paid out to small businesses, and that's significant expenditure on that area. And so we've been heavily involved with the post-payment assurance reviews there. And we've just completed a return which has got to go back to the government department on that in terms of what our strategy was and how we've gone about it. So what I envisage is, obviously I've got the listing of all the grant funding coming from government and what we spent and what we've actually incurred in terms of cost related to that. And when I was talking to Andy Rothery, that's what I said was something that we need to do early on. We've done a batch of work in relation to grants so far in 2021. I see us doing another piece of work in 21-22 very early on. So we've got to really analyse that funding which has been provided, all the terms and conditions in relation to that, and to carry out the necessary work to provide the assurance that that money has been handed out well.
Okay, thanks. Sorry, I wasn't making myself terribly clear. I think that and I do appreciate you've done a considerable amount of work in the current year, if you like, as part of the emergency processes. I was thinking more about your thoughts for the consequences of the resources that have been available to provide emergency support to businesses and other agencies in the council. For example, in the social care sector, how might the flow of emergency funding from central government influencing any work you do on the social care providers to the council?
Yeah, that's one interesting area in terms of the adult social care. So, for example, infection control grant funding available to that. So that was one area where we actually received a request from the director and the chief executive, and one of my auditors has been actually working that team for 3 days a week now to provide support to actually process those payments out to providers. So we've been heavily involved in that. So
that's executive assistance rather than formal review, yeah.
So that is actually a hands-on role. So we've got to have great care when we come to audit that area, because in effect we've got to look at it independently.
Yes, of course, yeah. So, yes, that was more the thrust of my inquiry or suggestion, and if you like, it's the consequences and the follow-up work after the executive assistance or advice or interim support has been completed. But I do appreciate what you say about maintaining that independence of purpose. So that could that impact on your skill set for future work? Is there an ongoing disruption factor there?
Well, there's an impact on our capacity, John. But the good thing, you referred earlier to our partnership with North Somerset. We can actually use colleagues down there to carry out that review for us. So there's that level of independence as such, and vice versa.
Okay.
So I think we've just got to be creative in how we approach these things.
I think that's highly understandable, Andy. So one last question, if I may, Chair, and that's the degree of contingency that you're planning to factor into the plan. I know you've made the point in your report that the plan will be reviewed fairly vigorously as the year goes on. But would you expect a higher degree of contingency to be introduced into the plan as a result of the need to maintain maximum flexibility without disruption to key planned audit work?
Yeah, we've tended historically to use a kind of a 10% contingency to be made available. The interesting thing, John, is if we adopt this flexible approach, that we have kind of a listing of audits that we're going to include the plan, but then we're going to constantly keep that under review. then there's less of a need to have a contingency, because you know what your resource is for the year. So you basically amend the audit plan throughout the year. So you don't really need a contingency sum, because the plan is constantly flexing depending on what audits are cropping up and what you've agreed with the committee to carry out during the year. So in terms of increasing the contingency, that's one way of doing it. The other way is just to look at your bottom line and adjust the plan on a constant flexible basis throughout the year.
Well, you'll know that we've had several discussions about contingencies over the years, and as I say, I would rely on your discretion, partly from experience and also partly on key forward assessment of current or emergent risks, to have a realistic contingency, which I hope the committee would accept is your best professional judgment. Okay, thank you for that, and thank you, Andy, for your explanations, and thank you, Chair.
Thank you, John. Councillor Blackburn, you have a question?
Yeah, thank you, Chair. 2 questions, if I may, Andy, just following on from John about the business grant side of it. I mean, that obviously 10 months ago, it was a massive piece of work put on the desk, and then it's come back in additional chunks. I know as a recipient of a closure grant up in Scotland, and actually my wife's not sat next to me at her desk, but her business impacted in Baines and being in receipt of grant. I think the transparency over communication of what those funds actually are has been incredibly confusing for the business community. That there are levels that they're being told they will be given and apply for, but then funds turn up in their accounts, and there's actually, in a lot of cases, no communication to confirm what it's for, what period it covers, or anything like that. I would just be really keen to understand how you would look at auditing that side of it, to actually identify how good a job we've done distributing what are some fairly significant sums of money into our business communities.
That's a good question, Colin, because what we've tended to focus on is the accuracy and also the timeliness. The key objective right at the beginning, in terms of being given this money, was to get the money out as quick as possible. That was the priority. And throughout the early advice I was providing to the relevant officers about potential fraud and what they needed to do, everything I was suggesting, all those controls added time or potential time on getting the money out. So it was striking a real balance there between the primary objective of getting the money out and the secondary one about making sure that we're putting some safeguards over that money. So I think linked to that, in terms of the speed of getting the money out, I think probably that's where the communications fell off a bit, because the day job was to try and do all the checks and get the money out, and yet the communications weren't that probably well done. But that's something we could probably look at. But I think at the moment that's still not our priority. It's more about, have we had the evidence that the people have been submitting that they're actually entitled and eligible to this grant funding? Have we paid that out as required? And linked to that, our commentary about the timeliness of that in terms of the original objective.
Yeah, and I fully understand those pressures and the need to. I suppose it's now that we're at that point of probably third wave of monies being given out, that you would be thinking, are we on top of a lot of that? A lot of that data collection about, are they eligible, and what has changed in that 10-month period? In most cases, not a lot. So do we know more to be able to communicate? But I appreciate it. I just wanted to put it on the table in terms of that. It's just something I'm aware of, and I just think
there's been lots of things learned during the exercise, as you could probably appreciate, even down to the application forms and mandatory fields, because initially there are a number of fields within the application which weren't mandatory. People just left off things like companies' numbers and things like that, which therefore resulted in a lot more time being spent processing the application. And when it came to us doing post-payment review, that it kind of didn't help, because it didn't help us on our automation, data analytics are doing it quickly. So obviously we then offered advice about making sure all these fields were mandatory, which will improve everything.
If it's any comfort, Andy, I've observed Liverpool and Glasgow as authorities having changed 3 different times the criteria of forms and boxes to fill and everything. I think James, actually on reflection, having observed that from across a desk, he's actually been very comprehensive and good. So, you know, I've probably got 3 I can look at and go, actually, we've done pretty well. But that's the general one. The other question I really wanted to bring up was regarding things removed from last year's plan for obvious reasons regarding revenue estate, property acquisition, and asset utilisation. As we've heard earlier, I mean, it's such an important part of our finance as an authority. And I'm sure you're aware of the Montague Evans property review that's report, which was actually promised for the end of Jan. I don't believe is in yet, but is that going to have a significant impact on the way you approach these 2 areas? And are those 2 areas key things you would like to get through on 2021-22?
Yeah, but to be honest, I haven't still decided on where they fit in our risk assessment. So again, talking to Andy Rothery, when we're talking about property, again, it's billing and debt management, for example, there was coming to the top of the pile. So as I said earlier, these items will be included in the long list. It just depends through that risk assessment where we then put that in the list and where we then draw the line in terms of resources available. So it's probably something we can discuss at the next meeting, Colin, in terms of where was the line drawn and where were these things on the list and for what reason.
Right, because I do think that report coming in on property services across the board might actually influence how we judge the urgency of things.
Yeah, sure, I agree with that. And certainly if you can bring back to the next meeting the list with where the line was drawn, that'd be really useful. So thank you.
Thank you, Andy.
Anybody else got anything before we close that item off? No, and I mean the officially we've got room for debate, but I think that there's not very much to actually debate here. So we've raised the things that we wanted to raise. So thank you, Andy, and for your report. So apologies to everyone. We do just need to go back, and we need to actually have a formal vote on the Treasury management, because we have to note that. I'm just going to get the exact wording so that we've got this right. Not the audit findings report. Apologies. We are asked to, and this is the one where Gary said there was a typo, so we're asked to note the actions proposed in the Treasury Management Strategy Statement to be approved by the February Council, and to note the Treasury Management indicators detailed in Appendix 1. Can I just go round and have a formal vote on that, please? So we're voting to note those 2 items. John, are you comfortable with that?
Yes, agree.
And Councillor Blackburn?
Agree.
Myself, Councillor Elliott, yes, agreed. Councillor Furs?
Agreed.
And Councillor Hodge?
Agreed.
And Councillor Simmons?
Agreed.
Yeah, good. Thank you very much for that, and apologies for missing it at the appropriate moment. With that, though, I think we have reached the end of our agenda, and so I will thank everybody for attending, and for anybody who was watching online. And John's waving at me.
Yes, could I just ask that for the confirmation of dates, planned dates for the future meetings for 2021. I've got the 29th of April in my diary, but nothing after that that's confirmed. When would that be if it hasn't been done already?
I can send a list of the dates out.
Yeah.
Okay. Email a list after the meeting. That would be great. Thank you very much, Emphis.
Thank you. Thank you.
And with that, I will formally close the meeting.